Do I still want to own this stock or do I want to let it go? If I want to keep owning it, then yeah, I'll do the roll up. If it doesn't, if I don't want to own it anymore, then I'll go ahead and let it go. So it kind of depends on what you're seeking to do. Damon, how do you exit a trade when either buying or selling? You just do the opposite of what you did before. So if I bought the stock to exit the trade, I got to sell it. If I sold the stock to exit the trade, I got to buy it. Right. So every buy must be negated by a sell. Over the long term, when buying puts, it's a strategy to buy enough contracts to cover the shares that you own. Yeah, we talk extensively in class. A lot of those, if you log into drboyceprime.com, a lot of the class sessions we did where we talked about strategies I was personally applying to protect my portfolio. That involves buying a number of puts that exceeds the number of shares that you own, and also picking strong puts, like being really generous about protecting the portfolio so you can minimize the volatility. And right now, with the market down a little bit, I'm glad I did that. Let's see, Damon Robinson. When you buy puts or sell calls, do you have to own the stock to get those contracts? If you buy a put, you do not have to own the contract. If you sell a call, you pretty much do. If not, you're doing what is called a naked call. A naked call has infinite risk. Naked calls are so dangerous that I don't even teach naked calls because y'all ain't gonna go out here and lose everything on my watch. I ain't interested in none of that. And this is not investing advice, by the way. Y'all know that. I keep saying that just to make that clear. But at the same time, there's some techniques I just am not even interested in even talking about because ain't nobody out here got no business being naked. You put your clothes on. So anyway, keep going. And in fact, actually, most brokerage firms will not allow you to even sell a naked call anyway. They'll say, no, 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 no. This is infinite risk. We're not letting you do it. I never see the estimated credit to withdraw after selling 400 Mara cover calls. Instead, the credit either reduce my margin or used to increase my buying power. Either way, it wasn't withdrawable cash. I think a lot of times, Michael, if you give it a day, you'll notice that after you sold your calls, you will have that withdrawable cash. So try giving it a day. And then if that doesn't give you what you're looking for, reach out to support from Robinhood. They can explain to you the dynamics there. There may be a setting that you have to sort of calibrate to make your money available or something like that. But that is when you sell something and they give you money for it, that is money that you actually get. The other thing too that's really weird about how they do the accounting is they'll give you the credit for the call that you sell, but then they might in the account actually list the sale or the contract you sold as a debt that you owe, right? But you really don't owe a debt, right? You're just waiting until Friday or whatever to find out if the call's in the money or not. So what happens is as the value of that contract you sold does what they call time decay, you'll start to find that your available cash will start to grow slowly but surely. And so that's another variable that comes into play. But believe me, when you sell a call and they say you get $400 for that, you did get $400. It's just a matter of how they account for it inside the system. Damon, when buying put options for the purposes of insurance, what's a good rule of thumb to practice when choosing a strike price? Yeah, I pick about 10% below the current price. That's my rule of thumb. I try to apply, and that's it. Okay, so what I'm going to do is I'm going to go ahead and bounce out for today. I hope that this helped you. And yeah, I am live Robinhood, but unfortunately, I'm answering questions that were submitted in advance.